What's going on, y'all? It's your boy TK, aka the Market Ventriloquist, and welcome to my first video 2025. So it feels like just a few weeks ago I made this YouTube channel and posted my first video, but somehow it's already been a year. Now, honestly, I do not know where time has went, but here we are in 2025, back at it, ready to attack the markets. Now, a lot has changed in the world around us since then, and I'm sure we'll get into all of that at some point throughout this channel. But today I just want to do a trading recap of the past week. Today I want to continue a series that I started last year called A Week in a Rare View, where I'll take the price action of one of my pairs. For me, I only trade EU and GU, and I'm going to take GU today and just dissect where price went throughout the full week. The focus of this video is going to be looking at each session. I'm an intraday trader, so looking at London and New York. But before we get into any of that, I just want to say thank you to anyone who is sitting here watching me today. It is a pleasure to be in front of you, sharing my passion. You could be doing anything else right now, but you're sitting here listening to this guy talk about Forex. So thank you for doing that. I appreciate you for tuning in, and hopefully you'll continue to do so as I post more and more videos throughout the year. And if you aren't familiar with who I am, then you're also not going to be familiar to my trading style. So let's spend a few moments to break down what exactly that is. I would consider myself as an intraday trader using ideologies that follow closely to smart money concepts. So looking at liquidity, looking at structure, looking at timing, things of those nature, and using that within each session, whether it be London or New York, and trying to take advantage of the session's volatility. So for this trading recap session, I'm going to be looking at each session, London session in New York throughout the week, and try to see what the trade of the session would be, and ultimately recap whether I took that trade or if I took a different trade that maybe I shouldn't have. So without further ado, let's go ahead and get right into it. So in front of us is a price chart of GU on the daily time frame, and I like to do a top-down analysis of my pairs before starting to trade each and every week. Now, I am an intraday trader, so I'm not looking to execute on these timeframes. However, it gives me an overall directional bias for the week and allows me to align myself as closely as possible with that when trading on the mid and lower timeframes. This top-down analysis is something that I post in my free Telegram group each and every week. So if you are looking to access or something like that, just go ahead and click the link down below and you can see all of my forecasts and overviews. Without further ado, let's go ahead and do our top-down analysis, and then we can get into the trading sessions for the last trading week. So looking at structure here, I'm seeing that the daily is bearish. We have a low that was set, a pullback to create a lower high, and then a push that then created a lower low. That bearish daily structure is also in confluence with a bearish H4 structure, where if we look at the character of price, we can see that we had pushes lower, and the last H4 low was set here, a lower high here, and then a lower low, which kind of shares the same swing point as the daily structure. So we're seeing a swing push here and an internal H4 push inside of that daily structure. Ultimately, that led me to believe that this week we would see sells for the majority of the week, and that should be the direction that we're ultimately trying to go when we're looking for our trades. Now, this doesn't mean that we can't take buys. However, it just means that sells are going to be more than likely the preferable thing to do in the market at this point in time. Dropping down to the H4 time frame, I'm now going to observe that character, that price action, in order to get a bias for where I think price could start to reverse. As I look at this, I see H4's character was pushing up higher and higher, and we're getting slight pullbacks. Now, these character of price on H4 end up being our swing M15 structure. And what this tells me is that H4 is bearish, but M15 is bullish leading into this POI over here. So let's talk about this POI. This POI is a nice POI for us to pay attention to because it is a daily supply zone. It is also a point where we saw some liquidity get taken. And this right here is considered the extreme H4 supply point. Pretty much it's the supply zone that is protecting the H4 structure from being broken. So we definitely want to pay attention to that. And based upon how we were retracing back into this POI, I expected that we would see a reaction from here and start to sell lower. I'm actually going to post a quick snippet of my last forecast and overview so you can see what that kind of looks like each and every week. So just pay attention right here. Coming into London, what would I be looking to do? Well, this selling in here is valid, but I would prefer price to buy up and take this high first. Let price buy up, take this high, maybe even come into the H4 supply we talked about, and then ultimately start to sell down. All right, cool. So back to our current overview. What I'm seeing, just in line with that same last weekly bias, was that we would tap into this H4 supply and then start to see price trade lower. With that being said, I'm going to hop down into M15 and then start to dissect each and every trading session to see what the optimal trade was for the week. So starting with Monday, looking at Monday, as I observe this price action, I see that we had a new M15 range where we had a low that was set here and then a push higher into that supply. And ultimately, here's a point of decision where we have to understand if price is going to sell lower to break this and ultimately shift structure lower from this daily supply, or if price is going to buy up and take this high and push into the H4 supply. So as you saw in my overview video, I did prefer price to buy up, taking this high out and then selling. However, it's very interesting that I actually took a loss on this day. Now, I think that loss was a very undisciplined loss. It was a very antsy loss, and it is definitely not one of the key setups of this week. However, I do want to cover every trade that I've taken, as well as every trade that I think I should have taken throughout the week. So coming into London session, we see price trade below the Asian low, kind of taking out these relatively equal lows, and then ultimately getting a reaction up here. Now, at this point in time, I was a little bit too zoomed in. I was on M1, and as you can see, I still got some of my structural dots here, but I saw this happening where I might have just been making up some reason to get into a position, honestly, because as I reviewed this at the end of the day, I was like, I probably shouldn't have taken that. Nonetheless, I saw this supply zone, an M1 supply that kind of took some liquidity over here to the left. I also saw that we had some liquidity sitting here as inducement. So when price pushed up into there, I saw price push down, make an attempt to go lower, push down again, creating these relatively equal lows. And then what I did was I decided to get into the market here, cover this high with about a 5 pip stop, and I thought we would target this lower. And ultimately, as I look at M15, I thought we could potentially trade a little bit lower into like this demand range. I thought we would, I guess, induce people to buy a little bit early, push down into the demand, and then take off and take this high out. So I think that was a case of me trading what I wanted versus what I saw, because as we look at this, we aren't in premium pricing. We aren't taking any liquidity to the left. We are within a bullish demand range. So again, here we are, just being fully transparent on the buttons that I've pressed this week. So that was it for London. Now let's actually go ahead and move into New York. I'm going to clean this up slightly just to make it a little bit more appealing and easy to follow. Going into New York session, we poke above this high, taking this as liquidity. If we're following our structural bias, let's say M15 remains bullish, what we'll see is a push higher, a pullback, a push higher, and then a pullback. So because we are at this point, we can look to sell counter trend to the M15 structure. And the reason we want to do that is because we're ultimately in line with the overall H4 structure. So you are counter to M15, but because you're trying to sell after a higher high and you're trying to do so from an H4 supply, it does make sense to try to do that and get into the market a little bit early. So that was my bias of New York session. And one thing I saw was that we created some local liquidity here, and we slightly missed the H4 supply as in terms of a full imbalance fill, but we're close enough to consider that as a point to start to looking for sells. With that being said, I then hopped down onto M1 time frame, and I was looking for evidence for reason to go lower while looking at things like liquidations, changes in control in terms of supply and demand flips, and timing as well. So with this liquidity in mind, we have some liquidity to go target, as well as we saw that there was a counter trend line that was forming here. So we take the liquidity of the top, and then we start to see breaks of structure lower. So breaking structure isn't enough for me to just look to sell. I also want to see liquidity being taken from the market, control being switched, things like that for me to actually get into a sell position. So as I observed price, what I saw was that this demand zone attempted to hold and we failed to do so, ultimately breaking that internal structure of M1. We also then, after we broke these two structure points, this here and this here, we then came back up. We took this high out, and then we ultimately broke this low as well. So that let me know that sellers are coming into the market and are gaining control. Now, as we look at timing, as we look at potential liquidity, here's a great area that you can look to sell. And I think this is actually the number one trade of the week. This should have been the first trade to take on GU. However, I actually did not get into that trade. I was looking at something on EU at the time and I ultimately just missed this. But the fact that we got these relatively equal lows here, we got this trend line forming here, we got the swipe of the high over here, it's given us that evidence that price wants to start to retrace. And as we zoom out to M15, you can see kind of how that looks, right? You can see that we're starting to get these bearish candles come in. You got a bearish engulfing, a bullish candle attempt to buy up, another bearish engulfing. So as you read that price action, you can see that sellers are starting to gain control and buyers are losing their momentum. So again, another reason to look to sell, just that overall composition of price. Now, what that would have looked like was right around the New York kill zone window, which is from 9 to 10 a.m. You could have put a sell limit right here, used about a 5 pip stop with spread, and taken price lower, and you would want to go break even once you get an M1 lower low. Now we do get that, and that is not the trade that I took. However, the trade that I did take was this one right over here. So my entry was right here. I think I still had a 5 pip stop as well. And pretty much the reason why I entered over there was that we had this high, which swept this and then broke structure here. Then we had this kind of complex pullback of price into this supply zone, and then a breakdown again, creating more and more liquidity just sitting in this area. You can imagine all the people that's viewing that as support, viewing this trend line here as some support as well, and looking to buy and ultimately having their stop losses in areas where we can go and attack them. Now with this trade, I went break even as soon as we got this low right here, and my first take profit was at 1 to 4. So as we zoom onto M15, we can see that 1 to 4 gets hit, and I took 50% of my volume here. I then noticed that price had a demand zone right here that it was coming into, so I decided to take another 25% volume at about 1 to 6 and some change, just to secure a little bit more profit. And the reason for that was because we didn't technically fill the full imbalance. There was a slight little few pipettes of a miss here. I thought it is possible that price could buy off this demand, make a new M15 higher high, and ultimately we see this cycle again before making that true break and starting to go lower. So in the possibility of that, I just wanted to make sure that I was well positioned and took partials to make sure that, you know, I made money on this trade. With those two partials, I did bank about 3R, and then I had 25% of my position running just in case, you know, price went to break the swing low, right? I probably would have taken another 15% here and then just left 10% running, and ultimately allowed me to take advantage if price decided to break this, pull back, and start to seeing that trend lower on the M15 time frame. So what happened to my runner? Price taps this demand, it gets a reaction as expected, and price does not come to my entry. However, because of end of day spread, the swap spread, I got hit out this trade, very unfortunately. And it sucked because literally at 6 p.m. you saw price tank and dump, and pretty much let us know that demand is no longer in control, right? Demand is failing, and price will more than likely take this low, and we'll start to see that bearishness throughout the week. We continue to sell lower and lower, and now we come into Tuesday. So Tuesday, I'm just going to clean this up slightly again to not be a distraction. And when we look at Tuesday, we are still within this bullish range. However, is it something that we want to take advantage of? In this exact scenario, I'm going to say no because of where we're coming from. And if price is going to follow that H4 bias, then we're more than likely going to take out the last M15 low, which made the high into that point of supply. Now, this is something that I would consider as classic smart money trap because it looks good, right? It swept liquidity here. We have the Asian low set. We poke below the Asian low into demand, and ultimately we end up getting some sort of break of structure upwards. In a normal scenario, this is actually a good setup. However, it all comes down to context. As I suspected, this did not hold. It pushed lower. So for London session on Tuesday, no trade. I was fine with just sitting on my hands, not really doing anything. And yeah, let's go ahead and get into New York session. So coming into New York session, we now have a new M15 structural point. We just made an M15 lower low by taking this out the market. And we are now aligned on every single time frame from daily, H4, and M15. This means that ideally looking for sells is the key thing to do, but we want to make sure we're doing that in the right areas. So for me, the first area I wanted to pay attention to was right here. Now, this was very unfortunate because at the time we came into that zone, it was at 10:30, and unfortunately I was on a work meeting, so I wasn't able to take advantage of any trading from this area. We almost came into that zone right at 9 a.m. or 9:15 a.m., which would have been more than ideal for me. However, because we came to it a little late, I just couldn't pay attention to that. And the reason I'm looking at this zone is because this is the decisional point of supply. It is pretty much where price decided to break M15 structure. We also can see it as a point of inducement because we swept liquidity here, and then that ultimately led to price pushing lower. Now, I do like how we come back into this slowly, create a little bit of some liquidity here for us to poke into and then look for a sell. So ideally looking for sells here was the way to go. I do think, although I wasn't able to take advantage of it, it was a sell entry in here that we could have taken if you were around, and that is by way of taking out these highs here, seeing that control from demand fail, and ultimately seeing supply take over, seeing the break of structure on M1 here, and having this as the extreme supply of that M1 push down. So my entry would have been right above here. I think a 4.5 pip stop would have sufficed here, where you would go break even here, and you can even take your first partials at that low, about a 1 to 3.5. Sometimes I like pushing it to 1 to 4, that way I can take 50% and ultimately bank 2R and then have a runner. But as we can see, we get that push lower and you ultimately get that break even right there. You hit the 1 to 4 as well, so that would have been a nice secondary trade. As for me at this point in the week, I was 1 and 1 plus 2R net, and this could have been another opportunity to take advantage of. This ultimately doesn't hold. You would have broken even, so you could say you've maybe left some money on the table by only taking partials, but the argument is that this could then have pushed, you know, lower, maybe 6R, 7R, taking out this low. So that would have been fine to do so, and yeah, I think that was the trade of Tuesday. So here we are on Wednesday, and we see that price did not play from that decisional point. We actually start to buy higher, and coming into London session, we take out the Asian high, we take some liquidity here and go into another point of supply. Now, I did not trade London during this day. I only traded New York. Nonetheless, this day also had a nice trade where you could have taken a sell right from this area, and we'll get into that. So looking at this point, again, we see liquidity at this high, right? This is a strong high which made it push lower, so there's liquidity sitting above it. So again, coming into London, if we hop into the M1 time frame, we want to see people lose money before we get into the market, and that is exactly what we see in the Frankfurt session. If we're drawing M1 structure, we can say we made a high here, a low, a higher high, and then a lower low. So if you were early in the market, you can also say that liquidity was swept in this zone, which it definitely was, and you say, well, now why don't I look to sell this supply zone, or maybe this extreme supply zone, pretty much anywhere within this area? Why not look to sell if we're looking at a double top, a swipe, and then a break lower? This looks like one of those clean entry models, right? A smart money FU candle. And this is where it comes down to context. And if we zoom out, well, you could say this is one big push, and all of this is internal of that. So if you viewed it that way, you could say low, high, higher low, and higher high. And that's why you got to make sure you're not too zoomed into. Additionally, just the timing is wrong, right? We haven't started London session yet. This is all Frankfurt and, you know, pre-Frankfurt price action. So I like to take my entries around 3 a.m., you know, with a few minutes buffer into that. But around London Open is where you're going to see those best entries come into the market. So 3 a.m. for me is London Open. And what do I see? Well, I see we made a new high, a lower low, a lower high, and then a lower low. And this lower low also came by way of a swipe of liquidity and a push lower. So it ultimately looks pretty similar to this, right? It looks similar to that. But the thing is, this one has imbalance. This one is at the right timing. This one isn't coming off of anything in terms of to the left as far as demand, whereas this was potentially coming into this block. So that context definitely matters. And I would have definitely been looking to sell in this area if I was up for London at that point in time. This is a great trade and a great place to get into the market. Now I use a four pip stop just to add spread, and depending on spread, you might get hit out of this trade, right? It depends on how big that spread widens and how much of a buffer you put on the trade. But price does slightly trade above this high, and that is unfortunate because it then trades and pushes a lot lower. So let's go on the assumption that we were still within this trade. How would I manage it? Well, the same way I manage my other trades. 1 to 3, 1 to 4 is that area where I like to take partials. And as we can see, if I would have put price to 1 to 4, we would have been within this demand right here, right? This is a very slight demand, but it's important to pay attention to because there was some sort of buildup of liquidity here, a swipe of it, and a push higher. So I would not like to extend my take profit to 1 to 4 and be within that demand, because what if price trades down, taps this slightly, doesn't hit my take profit, and then starts to buy up? And it could do that, right? Because M15 would still be bearish. We could still come up into this area, more into premium pricing before we start to see the sell back down. So honestly, for me, I would have definitely used about the 1 to 3 here and just, you know, took my partials and called it, and, you know, just held the rest for that swing low. So what happens? Well, ultimately we blast through that. We hit the take profit 1. TB2 would be taking this low out the market, and we do that as well. So that is about a 1 to 10, which is a very nice trade. Realistically, I would probably have net maybe 6.5 R from that trade. And, you know, that is a missed opportunity for me. But yeah, that was London on Wednesday. Let's go ahead and get into New York session. So coming into New York session, we have a new range of price. We have an M15 lower high, which then made a lower low. And looking at New York session, well, what do we want to do here? We're bearish on H4, we're bearish on the daily, and we're bearish on M15. Well, for me, because we just made a lower low, I do like taking those counter trend buys back into this area, right? Pretty much the same way I took these counter trend sells to M15. The only difference is that these buys are not in line with H4. So they are to be a little bit more skeptical of, a little bit more safe, a little bit more confirmations from them in order to do that. But it makes sense to try to buy back into some points of supply, because that's how the structural cycle works, right? We have M15 lower low, we take this out. What is price going to do? Well, pull back. If you know how to spot a pullback and trade a pullback using lower time frame confirmations, liquidity, timing, all those things, then you can definitely take a trade back up into that direction. So that ultimately is the idea of this session, looking to take a buy after taking this liquidity. If we look to the left, there was also some liquidity that we took over here. I think that was the biggest idea, seeing that liquidity get taken, and price ultimately comes into a point of demand. And again, it's counter to the overall direction of the market right now, but it is something you can use to take pullback type of trades. Now going down into M1, looking at how price develops during this session, we can see that we get an M1 breaker structure here, and that pushes up and creates a new higher high. So this is what I would call a two-legged approach, where we've seen two legs of structure push up And the ideal trade for me here would have been once price came back into this point of demand. So price ultimately comes back into there, and then we start to see price trade away from there again. Same thing, going break even at the breaker structure, looking to take partials right at 1 to 3 or 1 to 4. This would have been the same point that I made earlier, where we have this point of supply, and I don't want to wait for price to clear the supply, right? 1 to 4 would be above the supply. Well, what if price decides to react here and just trade lower and M15 goes lower? So I ultimately want to take my partials within this supply. So again, we could have probably take 50% at 1 to 3, banked 1.5 R, and then let the rest run. Now this is something to pay attention to, because it's something that I didn't pay attention to when I took the sell that I lost, which was right after we broke this supply. So the framework for the sell that I took, which was my third trade of the week and my second loss of the week, was where I saw price come into filling this imbalance right here. And once I went to the lower time frame, what I saw was that we were getting a two-legged approach in price, right? We saw this push down and this push down, and that second push ultimately swept this high right in here. Because of that, I looked to sell right here, putting my stop loss right above the wick of this high. I believe I had a 6 pip stop, and my break even point would have been at this low. So what happens to my trade? Well, we get a reaction, it doesn't hold, and I hit stop loss. In hindsight, this demand that I drew, the one that flipped this previous supply, was enough of a reason for me not to look to take a sell from this supply, because at that point demand was in control, supply no longer was in control. So I should not be selling against a strong demand zone, because this demand flipped supply and it led to this M15 internal breaker structure. So for me, it was definitely a trade, a loss that could have been avoided, and I would say it wasn't a terrible trade idea. Like, the entry model was there. It's just that sometimes trades have reasons, right, invalidations to them, and this one definitely had it, and I did not pay attention to that invalidation. So yeah, in a perfect world, Wednesday you could have taken a 1 to 10 sell where you might have banked 6-7 R in London, and then you could have taken a buy, which I would say also has the potential by the end of the day to go towards that 1 to 8 kind of range. So I would say Wednesday had 10 R potential to it, just in 2 sessions of London and New York. But with that being said, we're going to go ahead and clean up the charts, and we're going to get into Thursday. So coming into Thursday, we did not break the M15 structural range yet, which let me know that there is still some potential to sell. However, based upon how all of this price action was forming, a lot of this choppiness, I did want to see some type of liquidation happen in order for me to look for any type of selling position. So here, my idea was that, well, we still have Asian high here, and if price starts to react after taking that out, then I can look for a sell. So price comes up, it takes out this high, it still respects this extreme supply point. If we drop down to like an M5 or M1 time frame, there's probably some imbalance up in here that we could take advantage of. Let's actually go ahead and observe that really quickly. This is still a point where supply has imbalance, right, to fill in the market, right? We have areas where there is inefficiency, orders are still meant to be filled, and we come right up into that and we start to trade a little bit lower. Now, at first, this did not look like an ideal thing for me to sell. I wasn't sure where my breaker structure was, but then we had something that I call a two-leg protocol happen, where we saw price come up into supply, tap it once, push lower, pull back, push lower again. So again, and I'm not the creator of this two-leg protocol, by the way, but yeah, this is an entry model that, you know, I like to take advantage of. And price pretty much pushed lower, and once it did that, I zoomed out to the M5 time frame because I wanted to see what it looked like, and I saw this M5 IFC right here that I was like, well, if price comes up into there, I'm actually going to take a sell. So price comes up into there, and I did not set a limit. I went to market exit, and because I did so, I actually got a better entry than I would have if I set a limit. With a limit, you would have needed about a 6 pip stop to cover this. I believe because I market exited, I was able to get about a 4 pip stop. So my entry was there. Like always, I'm going break even at this low, and I believe I took partials at 1 to 4, taking 50%, and then letting the rest run. We hit the break even point, we take partials, and that is the second win of the week. At this point in time, I was 2-2, and I was up about 4R on the week. Price then takes this low out. I ultimately thought that we would sell lower and maybe take the swing low, so this could have been a great day if we did. However, there is a lot of liquidity that was forming above these highs, right? We're starting to get this like trend line that's forming these 3 taps of relatively equal highs. So you can imagine if I'm trying to sell here, if people are seeing resistance and drawing a resistance zone up there, right? All types of traders are looking to sell in this area, so it becomes a hot spot for liquidity. And one of the reasons why price ultimately did this and pushed higher. So I wasn't surprised once that happened. Maybe I could have taken more partials, but you know, that was the trade of London session. It maxed out at about a 127, but I net 2R from it because I did leave that runner. So with that being said, let's go ahead and get into New York session. So in New York session, I'm just going to take this back slightly to give the framework as to what to do for New York. Once we do take a high out the market, I can take that counter trend sell, right? So for me, price had this high, we made a lower low, and then we made a higher high. It's this, the same thing as over here. So if I get evidence of selling, I can look for a sell and take that counter trend at least till we get back to some points of demand. So let's zoom out really quickly on H4 because I think it's important to do so to see what my basis was for this trade. And seeing that price took all that liquidity that we spoke about, and we came into an H4 point of supply, which helped push some of these M15 or ultimately push that first M15 structure to bearish. I said, well, that's enough for me to look for counter trend sells in New York. So going in New York, I just have to find one of my entry models. For this one, I decided to pick a 2-leg. Price pushes up, pushes lower, pushes up, pushes lower, and we come back into this supply right here. So I take a short there, stop loss above the high, or actually I think I covered the swing high for this one. I think I used about an 8 pip stop loss. I didn't want to get swept out by this and, you know, maybe using a 6 pip stop loss, get swept out and then price trade lower. So went break even once we took this low, still had the same take profit protocols. However, price then decided to trade back up, hit me out at break even, and surprisingly enough, we don't take my stop loss. So if I left my stop loss open, this would have happened. So I wasn't able to take advantage of that. Unfortunately, it was a break even trade. It is one of those things that it just pans out just the way it is. And I want to draw some attention to something while we're here, because this is literally, not literally, but almost the same as this, where I'm taking a sell counter trend. We're hitting some demand, buying back up, and you know, we could hit me out the market, but we failed to do so and start to break lower. Well, history repeats itself, right? So took a sell here, price comes into this demand, which ultimately broke the high, tried to buy up, and then failed and sold lower. So sellers take back control, and pretty much I don't make money on that trade, break even. I become 2-2-1 for the week, and yeah, that's pretty much Thursday. And then I go into Friday up 4R, and then just seeing what I can take advantage of. So let's go ahead and get into Friday's price action. So London session on Friday, I actually don't believe there was a textbook trade to get into. I was up and available for the session. I did look to maybe sell in this area, which is actually slightly against my rules, because we were coming into this M15 demand. Structure is bullish, like I said, from here to here, but I'm looking to sell in the middle of a bullish leg. So I didn't see anything that could make me break a rule. Right? Sometimes rules are meant to be broken, but I didn't see anything. I didn't see any swipes of liquidity, anything that could discredit the reason price may be buying off of this. So I decided to sit on my hands, and honestly, you know, it did work. And as you can see, this was like the structural points that I was drawing to maybe see if we can get 2 legs down of price and then a sell or whatever the case may be. But I just ultimately decided against it. So in my opinion, London session for GU on Friday was a no-go. There was nothing to take. Let's go ahead and get into New York session. All right, so for New York session, last trade of the week, actually my favorite trade of the week. I think it again, it comes down to just that ultimate understanding of history repeats itself, right? The same way this sell up in here was similar to the first sell that I took in the week. Well, you're gonna see that this buy that I end up taking on Friday in New York session was similar to the buy over here that I missed. And the reason for that was because price took this M15 low. And remember what I said, once we take a low, once we take liquidity, if you see those signs, you can start to trade the opposite way. Again, I'm going to zoom out to the 1 hour really quickly just to show that, right? So here, after we took this low and this low, we got a potential buy. Here, after we took this low, guess what? Well, we can get a potential buy. It doesn't mean it's always going to happen, right? And you have to be wary. You have to understand the underlying principles of lower time frames, of liquidity structure, things like that. But high IQ, definitely area to look to buy. So what did I see? I saw that price broke up on the M1 time frame, right? We get an M1 BOS upwards. This low pokes up here. We had some internal range liquidity, right? We can also say that this is some supply that failed to trade lower, because if this M1 supply, which is protecting M1 structure, this right here should be M1, if it did its job, it would have pushed price lower to take this out. Because it failed to do so, price went higher and let me know that demand is currently in control. This is the extreme of that push up. It is the point that sits below the liquidity where we can look to buy. Now, the last confirmation on this was divergence, and I got to go deep in the bag for this one, but let's go ahead and pull up a price chart of Euro USD at this point in time. So as price was coming into this point of demand right here, we can see on EU, price took the low and traded lower, right? It took the swing low. Whereas on GU, we were respecting the swing low and come into some demand. That divergence of seeing price go higher here, but lower here, is what gave me that last confirmation to try to buy, ultimately saying that, well, this is a strong point of demand because it is resisting the point of sellers attempting to push the price lower. So once it got a reaction, I decided to market X. I covered this, and I think I had about a 6 pip stop here. And for this trade, because it was Friday, I did decide to ultimately take profit at about 1 to 4 once price pushed up into this point of supply. Now that brought my gains to the week to a plus 8R. There's some variance just because of charges and things like that, so I might have realized about 7, a little bit over 7. So price decided to push a lot higher, so I might have been able to squeeze a little bit more out of this trade. But it was one of those things where it was a Friday. I didn't want price to react off of this, sell lower, take this out, and then me not bank anything. Maybe I could have done my half R here and then half R at 1 to 10, and I would have made, you know, about 2 or 3 R more. But honestly, I'm content with what I did here. So I ended the week at a point of 3, 2, and 1 plus 7R gain. But as you guys saw within this, GU had a lot of trades throughout the sessions throughout this week, and yeah, some of them I wasn't able to take advantage of, mainly on Wednesday, but it ultimately was a pretty good week on GU, and we're looking to duplicate it again next week. So that is episode 1 of A Week in the Rear View. This week we decided to do GU. Ended the week at 3, 2, and 1, so plus 7R there. Could have been a way bigger week, but honestly it was a great week nonetheless. Was able to get a few wins in a row, so that definitely felt good. And yeah, I'm just looking to do it again next week. Appreciate y'all for tuning in, and your boy TK is out. Later.